Okay, hi everyone, and happy Friday to you all. Big welcome to all those who have joined us tonight, and hello to our new attendees. I'm just going to wait a couple of moments just to make sure everyone has joined. So just give us a moment. All right, let's get started. So what is Property Feed? For those who haven't heard about us or you're new to the platform, we are a platform for building relationships in the property development industry. We connect consultants and contractors to clients, and we provide a forum for property development education. So the event coordinators are myself and Dan Everett, who you might have seen on a couple of our previous webinars. Just a quick disclaimer that the content mentioned in this webinar is for information only and should not be regarded as professional advice. A quick introduction to myself. I'm a project manager at EVERETT Property Development Management. EVERETT are a property development consultancy. We assist landowners through the process of property development. We work throughout Queensland, Southeast Queensland and Northern New South Wales within the sectors including subdivisions, residential, commercial, retail, education and industrial. On to our guest speaker, Natasha. Now, Natasha has been attending our events since day dot, so we're very grateful to have her on board for our webinar tonight. Natasha is a mortgage broker and the director of Financial Wellbeing Group. Natasha has over 15 years experience in the finance industry, and prior to Financial Wellbeing Group was the head of sales for one of the largest non-bank lenders in Australia. Natasha is passionate about revolutionising the finance experience for customers with a holistic approach to individuals' needs and goals along their financial wellbeing journey. Natasha thrives off her expertise with first home buyers and customers looking for lifestyle change and upgrading to their home and investment lending structures. So, hello, Natasha. How are you?
Thank you. Be here.
All right, let's get started on the topics. So tonight we'll be running through a number of grants and incentives available to Queenslanders. So just to confirm that the state incentives mentioned tonight are only Queensland based, and they vary between each state in Australia. So we've got the federal incentives, which we have the HomeBuilder grant, which was just announced 2 weeks ago. We have the first home loan deposit scheme. Then we go on to state incentives, where we have the first home owner grant, stamp duty concessions, first home vacant land concessions, and the first home concession. Now, the Queensland government has a lot more incentives than this, but we're just focusing on the first home buyers and the HomeBuilder grant tonight. We probably won't get a chance to do questions at the end. So regardless, please do send us an email to events@propertyfeed.com.au and Natasha and I can certainly filter your questions through. Also, we've had a number of questions whether these webinars are recorded and whether our slides get uploaded. Yes, our video will be available on all of our social media platforms over the coming days. Okay, enough of the introduction. Let's get down to the juicy stuff. First off, we have the federal incentive, the HomeBuilder grant. I might just hand this one over to Natasha. Do you want to run us through the HomeBuilder grant and what's available to us?
Yeah, sure. So the HomeBuilder grant is a federal government incentive to kickstart the economy and to stimulate a whole lot of jobs. And one of the biggest industries to do that in is the construction space. So anyone, if you're in real estate, if you're a builder, you're a developer, you're a first home buyer, everybody is talking about this HomeBuilder grant. So similar to when the government announced the JobKeeper and the Job Seeker payments, this still has to go through legislation. So there's still a lot that we don't know, but we will definitely be talking about what we do know on this webinar tonight. So basically the HomeBuilder grant is a $25,000 payment that you'll receive after construction has commenced on a new build. So with this example here, you can see that the criteria is something that has been released already. So if you're buying a new home or house and land package, there is some income criteria that you do have to meet. So you can see there on the screen, singles do need to earn less than 125,000, and if you're in a couple, less than 200,000. Your new home must be worth up to 750,000, and that's combined your land and build value, and it must be your principal place of residence where you plan to move into. Now, if you're planning on doing a big renovation, you do have a minimum spend of $150,000 before you qualify. So it's not going to be for small kitchen renovations or cosmetic things like decks or pools. It must be to improve the livability of the home. So they're the two criteria for if you're buying and constructing or if you're renovating. And one of the biggest key things that everyone just needs to be aware of is that the contract date does have to be signed from 2 weeks ago when it was announced, right up until the end of the year. So that's the 31st of December 2020 that your build contract has to be signed. Then construction must start within 3 months to qualify for this grant. So that's one of the big things that is still to come out, is exactly how it will be processed and when exactly it will be paid. So it's probably going to be similar to the first homeowners grant here in Queensland, where it will be paid directly to the client, usually around base stage. So it's probably going to go through the similar channels, but like I said, that is still yet to come out with those fine details. So and something that everyone is waiting to see how it will be used is for funds to complete. So at the moment, you couldn't use this $25,000 home builder grant as your funds to complete at settlement, as it's paid once the construction has begun. But that's where a lot of people, particularly a lot of mortgage brokers, are holding our breath to see if any banks come out with any policies or things that will actually allow it to be made available at settlement. So that's a bit of a keep you posted situation. That's in a nutshell the home builder grant.
Amazing, and hopefully we hear about that very soon. Let's touch on a case study just with the home build grant. So say I own a vacant block of land. I have never built a home before. This will be my first build, and I intend to build a house on this block of land. Can you run us through what grants I have available?
Yeah, so based on this scenario, I would say no to the vacant land concession because you already own the block of land, so you should have already got that at the time that you bought it. But as far as if you plan to build on it as a scenario, then the first home loan deposit scheme, which we're going to touch on a lot more in some of the later slides, then you can qualify if you're building on a block of land and it's your first home that you're going to move into. The first homeowners grant as well is payable at base stage and sometimes available at settlement as well. And then the homeowner grant of $25,000 would also be payable if this was your first home and you're moving into it. So that's yes to the last three.
Okay, brilliant. Thank you for that. Now on to the Queensland state incentives. I'm going to touch on a little bit of the eligibility requirements. Now, these are only some of the requirements that are applicable, so just keep that in mind. It's pretty similar to the home build grant as well, these eligibility requirements, but obviously you need to be 18 years of age, an Australian citizen or a permanent resident. You and your partner must not have previously owned a property in Australia that you live in. You must be buying or building a brand new home. The value of the home, including the land, is less than $750,000. You must move into the new home as your principal place of residence within 1 year of the completed transaction and live there continuously for 6 months. So there's a brief description underneath these incentives here. Did you want to quickly run us through what's on offer?
Yeah, sure. So the first one, the first homeowners grant, has been available for a while now. So that's basically $15,000 that you'll receive if you're buying or building a new property. So that can include a house and land package, that could include an off the plan unit or townhouse, or something that is fully built and brand new when you buy it and move in. So as I was mentioning before, that first homeowners grant is usually payable at slab stage, which is obviously after settlement, but there is a good range of banks that will actually have it available at settlement. So basically they retain less of the build, so they're putting in that $15,000 at settlement, knowing that they're going to be reimbursed by the Office of State Revenue once that slab stage has started. So where that's a little bit different to the home builder boost, there's another condition that construction must start within that 3 months. So that's why there's a bit of a wait and see to see what the banks do with that, because there's that risk that if the construction doesn't start in 3 months, that they'll be out of pocket that $25,000. So that's the difference of when the first homeowners grant can be payable at settlement in some cases, whereas it's a bit unknown at this stage as to when that home builder, when exactly that will be received. So it has to be yet brand new and $15,000. Now the first home loan deposit scheme, which is also something that was really new and just released at the end of last year, is basically where the government guarantees up to 15% of the loan rather than getting mortgage insurance. So if you jump on the government websites and the fact sheets, they make it sound a lot more confusing than it actually is. So for example, if you're buying a property and you get a loan above 80% of the purchase price, you'll need mortgage insurance and pay that mortgage insurance at settlement. Now, if you're a first home buyer, you probably have minimal deposit. So if you've got a 5% deposit, you'll get a 95% loan. And the mortgage insurance on that is quite a lot. That can range from $10,000 right up to nearly $20,000. So at settlement, you usually have to have at least 5% deposit, and then your mortgage insurance of $15,000 as well, you have to come up with out of your pocket at settlement. With this scheme, the government guarantees it rather than getting the mortgage insurance. So you actually avoid the mortgage insurance policy, which can sometimes be stricter, and also save that $15,000. So I know we've got some more slides again on that, but that's a really good one. So on the 1st of January this year, it was available for 10,000 spots, and you had to reserve your spot. And the way you can do that is directly with one of the lenders that participate, or going via broker to help you reserve that spot with one of the participating lenders until all the spaces are exhausted. Now, that first 10,000 that was released at the 1st of January this year, that all became exhausted about 3 weeks ago, to a month. But everyone has a feeling with the new home builder that they're going to go like hotcakes this time around.
Sure.
There's probably, you're going to have to get in quick and get your ducks in a row if you want to qualify for that the home loan deposit scheme. Then now the next couple of concessions, which in some states it's called stamp duty, here in Queensland we have transfer duty. So if you are buying your first home, if it's an established place, an established property that you're not building, then it's called the first home concession, and up to certain limits, it will mean your transfer duty that you have to pay is very minimal and next to nothing. If you are buying a block of land and building, it's called the first home vacant land concession. So the difference between those, if it's established or if you're buying the land to then build on. Now, to work out exactly and calculate this, there's a couple of ways. I'd say 3 ways to know exactly how much you're going to save and how much you need to contribute at settlement. Now, the first would be you could jump on to the Office of State Revenue website. There is tables and calculators that you just go plug in your details. The second would be to have a chat to a finance broker. Like myself, we do actually have software that we just plug in your details and it will automatically calculate the government charges that will be payable. So we tick first home buyer, house, land, this amount, and it will automatically calculate with the concessions included. And we will draw up a funding table for a client, which shows how much funds to complete they'll need available at settlement. And then the third way would be to have a chat to a conveyancer, because they're the ones that will actually arrange those concessions for settlement. So make sure you're filling out the right forms, make sure you're getting the right concessions. A conveyancer will actually be the one to organise that. So something else that's also with all these incentives, the home builder grant and especially the the top two with the criteria. There's a lot of income testing for the criteria. So something particularly that's important for us, because we have a lot of self-employed clients, it's a good idea to get your draft tax returns run past a finance broker before you actually go and lodge them, because once you lodge them, then that's it. So you're wanting to have enough income declared and showing enough to service the loan, but you also don't want too much that you're not going to qualify for some of these grants. So it's a little bit of a jigsaw puzzle to make sure you get it right, especially with the end of the financial year. I would be running past draft tax returns past someone like a finance broker, just to make sure if you're wanting to take advantage of any of these, you're fitting under the threshold, but enough to service, if that makes sense.
Yeah.
Yes.
Okay, brilliant. Thank you for all that.
That's okay.
Taking it into a case study now, so a vacant land off the plan sale. A buyer is considering both options of land only and a home and land package. Can you briefly talk through finance scenarios where it's land only versus home and land package?
Yep. So if you were to buy your land only first, so that means you're going to sign a land contract and you're going to settle on it without your build contract being finalised and included. In a borrowing capacity situation, you have to include your current living situation and the land loan. So your rent or your mortgage that you're paying, and then the land loan as well. With a house and land package, if you're going to do your build and your land at the same time, you don't have to include your current living situation. If you're going to move into it, most lenders, all lenders, will make you discount the rent that you're currently paying, because that's where you're going to live. The same with if you're buying it as an investment property. If you're just buying it as the land, you won't get to use rental income in a servicing calculator, versus when you do it all together, you get rental income to also factor in, because it's being done all together. So that's some of the main differences with getting finance if you're getting the land only or the house and land being done together.
Alrighty, let's put that into a timeline now. So this is a home and land scenario. In this timeline, we have included some timeframes where the home builder grant may be applicable. So you'll see at the contract house and land phase, that's obviously when you execute the house and land contract, and then at the start of construction, you need to start construction 3 months post executing that contract. So Natasha, I'm going to hand this one over to you. Did you want to explain what you're doing as a finance broker throughout this process?
Yeah, sure. So the initial stage there of house hunting, clients usually get a feel of how much they're looking to borrow, or the areas they're looking to get, and a general ballpark. So when they come to me, I will always recommend trying to get a pre-approval first. So I will go through at that stage the borrowing capacity, how much funds to complete they need, all the government grants that are available that they might be able to use, and then we get that pre-approval from the bank. So the only thing that's then needed for their unconditional formal approval will be the house and land contract and evaluation. So you can see then obviously then they sign the contracts, then we get the valuation done, and then the clients will go unconditional. So you can see there in this scenario, they're buying it off the plan and the titles haven't registered yet. So usually once titles registered, most standard contracts then have a 2-week or 14-day clause for settlement to happen 14 days after the titles have issued. So it's at that settlement date that the grants and incentives will really take benefit. So your first homeowners grant, if we go with a bank that will allow it at settlement, your first home deposit scheme, if you're utilising that, you'll get that benefit at settlement, and also the transfer duty concessions will happen at settlement. And then what your build will start almost straight away, because your house and land is being done together. Then once that construction starts, that's when you will apply for the first home builder, and that grant of $25,000 will be paid after settlement. So that's what I was saying. There's a bit of everyone's waiting to see if that will change, but at the moment that $25K boost will be paid after settlement once construction has started.
Sure. Okay, let's look at this in a land-only scenario.
Mhm.
So in this scenario, the buyer is only purchasing the land and not the home and land package. So, this gives the landowner the opportunity to maybe land bank on the block of land should they not wish to utilise the home builder grant at this stage. Do you want to quickly explain how you typically assist clients throughout this process, and maybe some timing of grants that can be utilised throughout this process?
Yep. So similar to the first one, clients usually will already have an idea of where they want to buy and what kind of ballpark they're looking at. So we will get that the pre-approval for the land, and then they go and find their build contract and don't necessarily have their build contract ready at that time. So that's completely fine. So sometimes people, they may find their dream block of land and they really want to custom build their house and don't want the house and land package kind of all done together. They want a bit more time for that. So that's completely fine. What we will do is arrange a formal approval on the land only, but as a finance broker, we will also arrange a pre-approval for their build as well. So we will make sure from a borrowing capacity perspective that they can service the full amount when they do want to build, and we'll also make sure they have enough funds to complete not only the land settlement, but the build for down the track when they want to build. So once you settle the land first, you won't have the first homeowners grant, or the deposit scheme, or the builder's grant of 25,000 won't be at that land settlement. That will come once you do the construction loan. So
Yeah.
after that settles, title registers, and then you settle, then you go and can spend a bit more time with an architect, creating your perfect dream home. And then we go and get the unconditional for the construction loan. And then we can settle. Yeah, we're not waiting for titles then to be registered because, that already happened for the land settlement. And then once that construction loan settles, that's when you'll get the first homeowners grant, the first home deposit scheme, and also the builder's grant once the construction has started. So both two ways you can do it is perfectly fine.
That's great. This scenario has some really good benefits where where the buyer really has the control of the design. Whereas if it was a home and land package, the builder would own the copyright to those drawings. If this, in this instance, if the buyer decided to execute the contract. So I think this is a really good benefit for the land only scenario, and also the process. The buyer has more control, but also the flexibility to exit a contract if need be. Like, as I said earlier, if the buyer decides to just land bank the land and not decide to proceed with building a home. So I really like this strategy here.
Yeah, and something else I will just say on this one, if this was
Yes.
something that you were thinking about for this year, you would really want to be looking now. For example, if
Yeah,
you
absolutely.
were just going to buy, you found your block of land towards the end of the year and you hadn't even started the build or design process at all, you probably aren't going to make it to qualify for the home builder grant, because you really have to have the build contract signed before the end of the year. So if you're getting custom design plans and things, like, they do take a bit of time. So you don't want to leave that run too late, that it's going to go into next year before you sign and fully execute your full copy of your build contract.
Yeah, absolutely. On to another case study here. We've got an off-the-plan house and land. So this is one that you've put together. So did you want to take over this slide, or?
Yeah, so this is something that we're doing. We're doing a lot of these. This exact scenario. So, house and land packages generally, can be around the 450 to 550 mark. I think a lot in Queensland, so that's why I've picked 500,000. For a first home buyer, can go up to 95% of 500,000, the value. And then rather than having to pay mortgage insurance, they can take advantage of the first home loan deposit scheme, which is around 15,000 they'll save. They'll get the first homeowners grant. We'll go to a lender that will allow it to be paid at settlement stage. And then the home builder grant will then be paid once construction has started as well, of another $25,000. So all up that 54,000, which wasn't available not that long ago. So Most in this scenario, the clients still need 5% to complete, because they need that at settlement to make up that funds to complete. But something that I was mentioning to you before, some lenders do need genuine savings at that high LVR, but a lot of lenders will take renters' genuine savings. If you've got that rental history and you've got that's almost like, instead of savings pattern, you've been paying rental that time, they will classify that as genuine savings. And then how you come up with that 5%, it can be a gift, it can be a tax refund, it can be the first homeowners grant can make up that 5%. So you could even get a gift of 25,000 if you've been renting, and then reimburse that person with the home builders grant 3 months later once your builders start. Is just an idea, because like I said, everyone's still yet to see if that grant will be at settlement, but if it's not, that's also a way you could do it, get a gift for settlement and then reimburse someone. So that's just something that we're doing this exact scenario. We're doing about 30 to 40 a month at the moment with a few estates.
That's great. Just to clarify, was the GST and stamp duty on top of the $500,000, or is that included?
Yeah, so that 500,000 is the purchase price. So you will have some government charges and soft costs, like transfer duty, which is where you'll get your concessions, and your conveyancer will make sure you get all the concessions as a first home owner. And that's where you can utilize things like the first home owners grant at settlement can be used to cover those soft costs, is what they're called. So that would be on top of the purchase price. So that's where you can use the grants and things to cover that.
Sure. Okay, good stuff. There's a lot of savings in that.
Yeah.
Alrighty. So you mentioned this earlier in the slides, where only some major bank lenders are participating in the first home loan deposit scheme. Did you want to mention or run through this slide?
Yep. So this is the one where we're avoiding mortgage insurance and the mortgage insurance premium, because the government's guaranteeing the loan. So not all banks, it's important to know that not all lenders and most mainstream lenders are actually not participating in this. So that's where, again, it can be a good idea to visit a finance broker to actually find out who you're going to fit with. So you can see there the two main lenders, CBA and NAB, and their spots fill out really quickly. So each kind of like lender, it might be allocated a certain amount of that 10,000. Out of those two, and then you'll see a whole list of non-major banks, credit unions and things that you probably haven't heard of. So I would use quite a bit of MyState. What we do is order an as-if complete valuation. So the bank will order a valuation as if the property is fully complete with all your new plans, specs, and as per your build contract. So what we can actually do then is go, from a lending perspective, go up to 90% of that future value. So let's say in this exact scenario, the future value is $1 million. You've spent $200,000 to $300,000, and the end value is going to be $1 million. 90% of that's going to be 900,000. Here we go. And your existing mortgage is 600,000. So that leaves you about 300,000 to put towards a building contract to redo this property. So in that scenario, you would then still get the home builder grant of 25,000 after you've completed that construction. So that's an example of buying this old Queenslander and settling on it first, going and getting your designs, your plans and everything, and then applying for a construction loan based on an as-if complete value. So your value is going from 800 up to $1 million, and then we're going to really maximize that and get 90% loan of the future value, which then gives us a big pool of money to put towards the build. So
I think this is going to be a really popular scenario.
What was that?
I think this is going to be a really popular scenario where people are renovating.
Definitely.
Just trying to get on to the next slide. So in my research, I found this really good article on the Queensland Government website where it talks through the differences between the home concession and the first homeowners grant. We're really happy to, you guys are happy to find this on the Queensland Government website, or you can even email our team or Natasha. She has some really good resources available to all those who are looking for funding for first home buyer grants or whatever it may be. Did you have anything to touch on before we finalise the webinar?
No, I was just going to say there's no such thing as a silly question as well, especially if it is a first home buyer. You usually have, a lot of questions. So just be completely comfortable to ask, even if if you think it's going to be, a completely silly thing. There's no such thing. And I was also going to suggest if anyone wants to kind of register their interest for more information about the first, the home builder grant, when it becomes available, if it does become available as funds to complete at some stage, because that is still going through legislation at the moment. So there will be more exact details on how that will be processed, exactly when it will be paid, and things like that. And more than happy to reach out to Caitlin or myself. So this is something that just a coincidence that I had just started doing a lot of around December, before Caitlin asked me if I wanted to do this. So like I said, we're doing a lot of these every month. So we do first home buyers, investors, and also commercial and larger development funding as well. So that larger stuff from $5 to $50 million funding requirements for the larger stuff is something that that my brokerage also does. So if anything you need, more than happy to reach out and answer all the silly questions.
Amazing. Well, thank you so much, Natasha. And I do apologise for the little technical issue that we had on our end, but we will try and get this webinar up and running on our platforms very soon. Thank you to all our attendees. And if you have any questions at all, please do email us or Natasha. We'll be very happy to assist. I'm going to leave it there. Have a great weekend, everyone, and we'll touch base soon.
Bye. Thank you for having me.
No worries. Bye, everyone.